The misconceptions, I mean, maybe just starting from the most broad, it's weird still how many times I have a conversation with an executive and it just starts from a de facto, like, well, everyone knows UA doesn't work. UA is definitely alive and well. It's actually easier right now than it has been the past few years because much of the iOS pain points that broke the industry the last few years, mostly blown over. Everyone's just using fingerprinting again, other than Google iOS. So UA is pretty dang healthy right now. There's a lot of misconceptions that there's only a few viable sources or that only the biggest teams can do it.
Web stores. You've seen what good looks like, but have you seen great? AppCharge is the direct-to-consumer platform backed by the likes of Supercell and built by monetization pros from Moonactive, Playtika, Huge Games, and others. People who know the difference. AppCharge powers over $500 million in transaction a year for top studios, optimizing every detail. Deeply personalized web store offers custom-made design, industry-leading monetization features, in-game payments, SDK, and more. 70% of top grossing games already have a web store, but the ones scaling fastest, they're doing it with AppCharge. Learn more at appcharge.com. You've heard of Heroic Labs by now, and we keep talking about them because you need every edge to be successful in today's market. Heroic Labs' game stack is built like a brick house. You got the Nakama, their backend game server, Hero, their game development framework, Satori, their live ops service, and last but not least, Heroic Cloud to provide massive scalability. Heroic Labs is a battle-tested partner, and their tech enables you to be flexible, creative, and scale for success. Focus on your game, avoid tech risks, grow your product with scalable live ops, and save a big chunk of cheese, all with Heroic Labs. Welcome everybody to the Deconstructor of Fun podcast. I'm your host, who shouldn't be a host for an episode like this, Mishka Katkoff, and today we are talking about state of user acquisition in 2025. I'm not going to call this panel, a wonderful group of people. In the left corner, we got Josh Chandley, Chief Operating Officer at Wildcard Games, an independent, profitable, that's an important thing, and profitable game developer and publisher founded in 2016 with 10 million of lifetime downloads. Josh, welcome back to the podcast.
Yeah, happy to be here.
Then in the right corner, we got Warren Woodward, Chief Growth Officer at Uptick. And for folks who are not familiar or maybe have forgotten what Uptick is, it's a provider of user acquisition, marketing creative, growth analytics, and strategic consulting for PC, cross-platform, and mobile games. 500 million in downloads to your clients, as well as 500 million in revenue to your clients. Warren, welcome back to the podcast.
Hey, Mishka, happy to be here. Excited to talk UA today.
Awesome. And in the middle, Paul Bowen, Chief Revenue Officer at StreamElements, a creator-driven performance marketing platform at scale with 200 million monthly creators using it for Twitch and YouTube content. Paul, welcome to the podcast.
Thank you, Mishka. It's actually 2 million creators, not 200 million, but I really appreciate
it. Could be 200 million.
Aspirational today.
Yeah. So talking about the state of the market, I think it's good to start off with really, really high level. So where does the user acquisition stand in 2025? What I wanted to start off with is like, what are some of the key misunderstandings and wrong assumptions that executives and growth teams still hold about user acquisition? And Warren, let's start with you, since you're probably seeing the most of user acquisition in the market.
Yeah, man. I mean, there's the misconceptions. I mean, maybe just starting from the most broad. It's weird still how many times I have a conversation with an executive and it just starts from a de facto, like, well, everyone knows UA doesn't work, and it's like, well, hold on. I think data would show otherwise. So I think there is this perception. I think when people have a failed experience or can't bring a game to market profitably, talk to other executives or leaders that have that same experience, that's tribal knowledge. UA is definitely alive and well. It's actually easier right now than it has been the past few years because much of the iOS pain points that broke the industry the last few years, mostly blown over. Everyone's just using fingerprinting again, other than Google iOS. So UA is pretty dang healthy right now. There's a lot of misconceptions that there's only a few viable sources or that only the biggest teams can do it. And hopefully we can share more today about the how on executing in the current landscape.
Yeah, I agree. I think it feels that way sometimes because launching like entirely new games is so hard now, where revenue continues to concentrate on the biggest apps. And that's just a fun way of saying they're continually growing LTV, where some of these games might have a decade of A/B tests behind them. And when you launch a brand new game, you are in a literally unoptimized state. So it's hard to compete on that CPI. And it feels like just because those barriers are higher than they were 14 years ago when I started in mobile, it feels like UA is dead. But then once you cross that chasm and you reach profitability, scaling is very achievable.
Yeah, I think Crest has been proven completely wrong. UA is not dead. UA is live and well. It definitely went through a speed bump there between 2020 and 2024, let's say. Some of the larger platforms pulled away from, went towards SK Ad Network, right, and really invested there and didn't use fingerprinting. But if you look at what AppLovin have achieved over the last couple of years, I think it's clear that that if you have the right strategy, UA can be live and well. And I think, I would say probably the most dangerous assumption that an exec could hold is that it's impossible to scale a new game. And I would just say, look at the new games that we have in the top charts right now. We have King Shop, Disney Solitaire, Royal Kingdom. There's some real hits out there that are scaling well. So if you build the right product, you can find product market fit and the game can scale. The channels are there, and we'll get into the attribution discussion, but I think that really is the key to most of this, leveraging fingerprinting well to scale the game.
I think one reason that the narrative on UA has changed, I think we all came up in the industry relatively the same time, like during the 2010s. And UA served a very different function in the industry at that time. There was a ton of financial engineering being driven by UA to like drive top line revenue, to like drive M&A. And that all worked, quote unquote worked for founders trying to make exits, like during the froth of mobile gaming M&A during that time period. But the dirty secret is that a lot of that was just like loss leading UA to tell a narrative. And I think that era is firmly behind us. And it seems like Josh's that are like using, bread and butter, like use UA to drive incremental profit. Like it's not as sexy. It's not as aggressive, but like that is the healthy, proper way to use UA. And it's just, I think the industry is adapting to like, oh, this is how we should think about UA as a function. And the kind of like glory days of UA were not actually that glorious in hindsight.
Well, I also think you didn't necessarily need the best product either during those days. Because of the laser targeting of the platforms, especially Facebook, they were so good at finding the right users for your game. You didn't necessarily, you could find a pocket of users who could, monetize your game well, and that would be great. Those days are, we don't really have those days anymore. You can't just have an average product and still find success. So I think, we're in a completely new paradigm where you have to have a good to great product, and then work within the kind of constraints of the UA right now, which are not the laser targeting of kind of the days that we had, 7-8 years ago.
I think it's interesting because I fully agree with you both, and yet speaking to dangerous assumptions, I think a lot of executives still don't see the world that way.
What do you think they assume?
Well, I think that people still believe they can get valued on revenue multiples. But I think that everything that you said, Paul and Warren, like that froth, I think that we've transitioned from the idea of unprofitable growth to the idea of like EBITDA multiples. But there are a lot of studios out there still who think, well, if I can at least buy UA at like break even, maybe my annualized return will underperform a T-bill, but I'm profitable now and I've pushed this revenue number really high, and that's why we're at this place where it feels like mobile gaming multiples on revenue at least are incredibly low.
Yeah, If I could just insert
Please.
my not understanding, but trying to sum some certain things up. So I put in a graph here, and it's U.S. mobile games market growth and how it has slowed down over pandemic. So first of all, you see the massive, pretty much over 20% or compound annual growth of 20+% every year since a long time. And then it goes into, of course, the post IDFA decline, and kind of comes back to, where some quarters have been even closer to 20, but usually around that 5-6% growth. And correct me if I'm wrong, what was happening is the UA targeting drove revenue growth for almost a decade. And then with the IDFA deprecation, that drastically decreased access to data that was imperative for targeting as well as attributing ads. And what that led to was pretty normal thing. So when you have less access to data, you have less targeted ads. And when you have less targeted ads, that means you have less effective marketing spend. And because of that, you just basically lower your payback periods. And because you lower your payback periods, well, that means you lower your marketing budgets. And then because you lower your marketing budget, you see reduced quality as well as quantity of downloads, and that impacts towards the lower revenue. And then when you get back on the growth where we are right now, even though it's not as rapid as before, we're in this sort of a value optimization again. But with value optimization, it's, as you guys mentioned, it doesn't serve everyone. It's typical winner takes it all market, where those with the deepest pockets can fully utilize it. And meaning, in other words, if you're winning, somebody else has to be losing. Is that the way to describe?
I think there's a lot of volatility. Oh, go ahead, Warren.
No, I was going to say, I think a lot of what you said is correct, Mishka, and I just think maybe a little further context is helpful. So, when talking about the chart that you have on screen, I think is very telling. And yeah, when iOS killed, the ability to not target user level, the IDFA deprecation on iOS, it basically meant people couldn't do UA in the old world on iOS, but it had implications on both platforms, right? All of a sudden, the major channels were shut off on iOS. Your iOS spend is either losing money or you're removing it for most teams. And all the budget moves over to Android. Guess what happens when everyone is competing in Android? It drives up the CPMs, it drives down the margins there. So it had that follow-on impact, and that's why the overall impact of the industry was so magnified. Like, besides cutting off one leg of the table, it's making the other less stable.
Yeah, and I think it's a messy thing to look at. So the source here is App Store and Google Play, like the actual IAP revenue, correct? It's really helpful, and I think a fucking lot of shit happened in late 2020, early 2021. Other things that happened, like COVID ended, and that's a behavioral shift. But when you think about things like social casino, they crushed during COVID. When did casinos open? Late 2020. Go look at Google Trends, Xsola. Look at when that started to spike. Web stores, like off-platform payments. A lot of stuff has kind of happened in this period, in addition to just the IDFA deprecation. And so it's so hard to parse out all these different things. But I mean, IDFA was definitely a massive pain point for the big socials, which meant getting growth there was hard.
But I think Mishka made a good point about kind of the zero-sum nature of the market right now. I think it would be interesting to see a graph of time spent in mobile games, because I think that's essentially flatline. So I think you would probably see a similar growth curve to the one that we're seeing right now, where there was an acceleration between the 2010s and 2020 of time spent in mobile games, and essentially right now we're pretty much flatline. We're not growing share. Social has been taking away from gaming for the past couple of years, especially with the success of TikTok. And I think that's a real challenge as well. So, fewer installs, less time spent. So everyone's spending time optimizing their current product, not, launching more and more new games. That's kind of the other trend I think we see.
Yeah, and I'm just, sorry, go ahead, Paul.
No, that's it. Yeah.
Cool. The other thing too, Mishka, as you were showing that chart, I was just pulling up like a NASDAQ chart in the background, and they almost mirror each other. You can see that, like, with the stock market fervor, like with the stock market going down, it mirrors the investment level. And I think that's back to that theme of people were doing more irrational user acquisition when they're trying to drive M&A and drive financial transactions for their business. And as the overall market cooled down, I think
but it's not
people...
It's irrational based on the incentives, right? It's irrational in today's market. You think, why would you do that? But it's rational given how companies were being valued at that time.
I just wanted to pull in one chart where I get to prove Paul once in this podcast wrong. So your hypothesis of the overall time spent on devices has actually been increasing, not flatline. So and steadily increasing in terms of hours as well as in terms of sessions. And this is mobile gaming.
But I would like to see this data back to 2010, is my point. My guess is this accelerated significantly. So, yeah, I think this reflects the graph that you just showed around the moderate growth since 2020. I mean, I agree with that. My point more is the accelerated growth we saw between 2010 and 2020 as people were getting smartphones and more content was being released.
Yes, of course. Of course. The downloads is another one where you're seeing the downloads really peaking at 2016 and kind of beginning to decline since then. Especially the new games entering the market has never been as low as is right now. Like it's much lower than 2012. And when it comes to games in the market, so just looking at App Store, it's almost at the level of 2012. So a lot of games came, a lot of games went away, and market just looks really mature. But the time spent and the session spent and the session amount keeps on increasing. Users are just more and more on devices.
Mishka, you mentioning that spiking in 2016, I think sort of hints to another kind of macro trend in how UA has worked over the years. Back in the 2010s, everyone used to do this really stupid UA process where they would just buy as many cheap installs as possible, drive up the charts because Apple and Google surface the charts more prominently, and try to growth hack by just low value, empty calorie users to go up the charts. So there's these artificially high download numbers for games. And over the years, as the storefronts have basically moved that inventory of the chart position further and further away from visibility, that tactic is essentially non-viable now. So I think that, I don't know that it's the primary factor, but that's probably another reason we saw that download volume peaked around that 2016 time period.
It's also roughly the time when Facebook launched VO, right? So suddenly Facebook went from maximizing install volume to maximizing, ROAS basically. So you would expect install volume to probably decrease, CPMs to increase.
Yeah. I remember Paul and Warren. Do you remember, like, even before the free chart, the OG way before free to play was huge was on Apple and Google, you would make your app go free, drive and send installs to it, and then turn it back to paid. And those install counts would count towards the paid chart, and you would get a number of top 5 paid position, and you could get revenue that way. I mean, it used to, like, for a very long time, it was all about just driving installs, not because of the value of those installs, but because of what happened afterwards. It was really Facebook VO, Google TROAS, and all the in-app ad networks starting to do purchase campaigns and like post-funnel optimization that really changed the game for us.
Yeah, and I think during that era, like, there was so much discussion about growth hacking, and I think in it's like you almost never hear that term anymore. But like that's all that everyone was looking for, growth hackers back then, because it was an immature system, and everyone was just trying to game it in different ways. Like these days, it really is more just about like understanding the interlocking pieces in depth and just doing a good job of marketing a good product, like leveraging those pieces. It's a lot less Wild West now.
Yeah. Launching a game, getting to number 1 downloads was the key, and there was a different calculation on what would be the effect on your overall revenue and overall health of the business if you just push through and get it to number 1. Scopely was famous on that, how they launched the all the buddies games and just pushed them in to be the number 1, and that of course pleased the investors and created a lot of good things. But that was back then when I was a kid.
Dirty little secret. It still happens to a degree on App Store search results. People still do that. You're running scent installs to literally have people search for that term and then scroll to the bottom till they find your app. There are still places where essentially rankings or search result rankings matter. And even today, those big companies are doing those games.
Still growth hacking.
Still growth hacking. Yeah.
So let's talk a little bit about a company that is not growth hacking, but is just dominating. And that's, of course, AppLovin. So Josh, you wrote this really, really amazing piece on Deconstructor of Fun called AppLovin, the Apex Predator, link in the description. And you said in the piece that the company rose on top by owning mediation, publishing, infrastructure, and data in one integrated loop that disrupted the traditional ad tech model and left competitors scrambling to catch up. So Josh, can you dive a bit deeper into what makes AppLovin the uncontested player in the space of ad tech? Attention app and game developers. Are you ready to unlock the secrets behind the world's top performing apps and games? With Sensor Tower, you get the ultimate competitive edge, whether it's breaking into new markets, fine-tuning your UA strategies, or boosting monetization. Dive into data like never before, track global trends across app stores, analyze market-leading in-app purchase and in-app ad strategies, and benchmark your performance with real-time insight. The best part, Sensor Tower doesn't just deliver data, it helps you turn it into action. With intuitive tools and expert analysis, it's everything you need to make smarter, faster decisions. Thousands of app and game studios, from indie creators to global giants, trust Sensor Tower to help them win. So why not you? Start your free trial today at sensortower.com. That is sensortower.com.
Yeah, especially on in-app ads. Obviously AppLovin is still a lot smaller than Meta and Google, but they are completely cemented right now on the in-app ad. They own gaming. The reason we can say that is that they own 80% of the share of mobile mediation, which is essentially the auctions that happen to determine who gets to show that ad. So they have an 80% share of mediation, and when they mediate, there's no better UA source out there than AppLovin's app discovery. And really, they've cemented it in two ways. First is simple. They have an efficiency advantage. If you're Unity, if you're Meta, if you're Google, and you want to buy inventory from Max, you have to pay AppLovin 5%. It's that simple. So if you want to win an impression from AppLovin, you can't be as good as them. You have to be better. And second, they have an incredible data advantage. It's very hard to put to words the advantage of having Max internal, but I'll try. So when AppLovin runs UA, they kind of cause that install and they track the revenue. And when the revenue happens, it goes directly within their servers back to them. And they see everything about it. They see the ad type, they see the IP address that they pass it, they see battery life, they see everything they want to see. But what about Unity? What about Google? What about Meta, Integral, Moloco? They have a different pathway. So when they're tracking ad revenue especially, Max finishes the auction. Max then passes the auction result to the device, like literally like the phone that, there we go. The phone that is being, nice visual, the game's being played on. And that gets passed to the MMP, and the MMP decides whether or not the ad network gets to have that impression data. Now, there's a couple of key points here. So one is the MMP may decide the ad network just can't have that data. No one's telling, only Max can tell AppLovin whether or not they get data, and Max is AppLovin, so they get it. But second, the data quality is different. All these MMPs pass back data in different ways, and there are different things missing. The best example of something missing is something that AppsFlyer doesn't currently post back, and that's the ad type. When Unity or Moloko or Google or Meta is trying to optimize for ROAS for you with ad revenue, they don't know if revenue was a banner ad or interstitial or rewarded video. So if they see that you sold an ad and that ad was sold at a $10 CPM in the US, which is like a $10 for 1,000 ads, a $10 CPM. Well, banners, typically are at a $1 CPM, and rewarded videos are often at like a 30 to 50. So if that $10 CPM ad was a rewarded video, that's some kid on his mom's phone. If that $10 CPM ad is a banner ad, like the Sultan of Brunei is like in your game playing right now, and that matters. AppLovin gets to know that. Unity doesn't. So knowing that means that, yeah, they're going to dominate. And so what we're seeing right now, as of like today, is on Androids, on Mac's inventory, AppLovin is buying 2 times more inventory than the next ad network. On iOS, it's 7 to 8x more. So they're buying almost 2/3 of inventory on iOS right now. They have an insane advantage because they can see everything that's happening, and they're providing friction for every other competitor by charging them 5% just to play.
But there's something else going on there, right? There's something about iOS that shows that they're able to better value a user than anyone else. Because, why are Android and iOS not the same?
I think there's 2 reasons. So one reason has to do with the big mega companies, Meta and Google. Like, you were right, they went all in on scan. They didn't do probabilistic, which is like an interesting choice in retrospect. But basically, they believed Apple, and because they have no probabilistic attribution, they can't compete on in-app ads. And so on Android, Google and Meta combined for about a 36% market share on Macs. On Android, those two combine for a 6% market share on Macs. So there is literally just less competition for inventory on iOS. The other thing, though, is the attribution is substantially more fuzzy. I think it's no secret that hijacking the click link, which is the primary thing used for MMPs to attributes, has been a really powerful tactic on iOS. If you watch a mobile game ad today, it's funny how the store always pops up. Mm-hmm. And that's a click link trigger. That is them telling the store or the MMP, hey, I sent someone to the store. If they opened the game, it was me.
Right. And that's why if you look at the data from these networks, you see like 90% click to install on some of these rewarded video networks, which is like not rational behavior, but it's a byproduct of what you're describing, right, Josh?
Yeah, exactly. So on AppLovin today, you might see a click-through rate on Androids of between 5 and 15%. But you're going to see a click-through rate on iOS of 90%. 9 in 10 players aren't fucking clicking on your ads. They're hijacking the click link, because the way MMPs work, there's only 2 ways that you can signal that you may have caused that install. One is an impression link, which is very weak, like, hey, they saw an ad. But one is a click link, which means they went to the App Store because of me. And so when you trigger and you spam those click links, you win a lot more of those installs that maybe you did or didn't cause. And when you do that, go ahead.
Oh, I was going to say, I know we're getting pretty in the weeds here, but I think maybe worth a quick diversion to talk about like why that behavior exists. Like, look at the incentives, right? So there's basically 2 parties that are pushing this behavior of, we're going to say something that's not actually a click was a user click, and claiming that install came from the ad network. It's clear why the ad network wants this. They can claim the install and claim more value. But what's less clear is why the MMP would want this also. If you look at the business models of the MMPs, they are all based on attributions for paid campaigns, and organics do not count towards this. So it's also, they have an incentive to also support this more aggressive install claiming behavior, where a click is not actually a click with human intent.
Well, there's an additional, so that's right. And then there's an additional party who is also in on this and knows what's going on, which is the user acquisition manager, the people actually spending the
Their
money.
numbers look better.
Exactly. Yeah. So, I mean, the short selling reports of AppLovin kind of, mention this, but this is something that everyone already knows. Everyone knows this goes on. Everyone knows the user acquisition managers know what's happening. They see the 90% click-through rates. They know what's going on. MMPs know. So obviously, the networks know as well. But everyone's complicit in it because it makes the system work very well.
That's okay. So, and the reason for the 90% click-through rate on iOS is can you just?
It's not just iOS. It's both platforms.
It's both. Like
it's worse on iOS right now because it's a more powerful technique, but it's a measured click-through rate. 9 in 10 players on iOS do not click on video game ads.
Yes, of course not.
But 9 in 10 players on iOS are forced to kind of drag their way through go ahead.
Describe the actual ad behavior might help.
Yeah. So right now on iOS especially, but everywhere on in-app ad, we've moved to a 3-tap system. So first, there's an experience, usually a video. The on interstitial is skippable in 5 seconds usually. And then you get an X. After that, there is an end card experience that is usually a playable ad. And after a couple of seconds, there's an X. And then usually there's just some kind of final screen that just shows the app icon or something similar, and that has an X. And I believe, Warren, it's between those first 2 X's that the majority of ad networks see as basically a click signal and pop up the App Store. And so the App Store pops up as part of the UX, and that ad store pop-up counts as a click.
Yeah. I think the flow is less important between kind of different formats, but essentially what you have is either a video or a playable or a static where the app store is loaded basically at the end of some form of timer. So you'll watch a video for 15 seconds and at the end, the app store is automatically loaded. And that's loaded with a click-through attribution. So the network is saying the user clicked on this format and therefore I want to get attributed if they install it. So that's kind of the behavior that's happening.
Got it. So not misleading, but basically just a poor user experience that kind of forces you to open up the app store to get rid of the ad, whether it's playable or the end card or a video, attributes as a click through because it kind of shows that you're interested and you actually click through the ad and wanted to download it.
I mean, the other thing is hard to click. I mean, there's a meme about this, but hard to click on X's closed screen as well. So you accidentally click on the format versus the X. There's a ton of techniques here.
They're not doing that because it makes you install the game more. They're doing that because it helps increase the install rate measured because it helps you win more of the actual impressions that did occur. Or installs that did occur.
I was going to say, I would encourage everyone to read Josh's article. It's really good about explaining like why this is happening. I wonder if we should maybe pivot to like zooming out and just talking about the actual implications of this in the ecosystem. How it's affecting
Let's do that. I just want to do a couple of things. So just because there are terms thrown around. So CPM is a cost per milli, which is cost per 1,000 impression shown. So your ads is viewed by 1,000 people in Instagram and others. Mediation or mediator, for those who are not marketer, basically your game is the ad supply. So if you're looking at the chart that we have here in Spotify or YouTube, your game is the ad supply. Then there's multiple ad networks. They are the demand for the ad inventory. And then mediation automatically chooses the best paying ad network to show an ad in real time based on factors like CPM, geography, ad format, etc. And then AppLovin is so good with this, as I understand, is because they built from scratch a real-time bidding system versus a waterfall meaning like you have different ad networks in line. You've got to use the Unity, then you're going to go to Meta and the Google, etc. And then MMP, as in AppsFlyer, for example, is a mobile measurement partner. third-party service that helps to track, attribute, and analyze user acquisition across different marketing channels and ad networks. So that hopefully helps folks who are maybe not so familiar with the terms used.
Yeah, and just to clarify, so part of what you're describing, Josh, of how AppLovin has gotten more powerful, there's kind of a flywheel, right? Because most of these benefits of the additional data granularity and data signals that you're getting from the ad serving, these are only really unlocked if you're also monetizing with AppLovin. If AppLovin, or rather, if AppLovin is your mediation provider, is that correct?
Yeah, well, I mean, if you're running IAP, then it's not as big of a deal. But I think what you're talking about is for studios, once you acknowledge that AppLovin has an incredible data advantage and they can win distribution, what that means is now essentially you have to run UA with app discovery because they are winning 2/3 of impressions on iOS and at least a third on Android. So if you are a mobile game company, you need to run on AppLovin. You need to buy user acquisition with AppLovin. The plot twist is that if you are running an ad monetized game or a hybrid monetized game, and you want to run either an ad ROAS campaign or a blended ROAS campaign with them, which are campaigns that use either all ad revenue or ad and IAP revenue, they only will let you run those campaigns if you use Max.
Exactly.
And so what that means is in order for your company to grow and succeed, you need to turn their market share from 80 to 81%. And that's the flywheel that you're describing. And that's how they've grown from about 40% like 5 years ago to where they are today.
Right. And we're exacerbating that by like even this discussion today. It's just snowballing, right? Because as AppLovin becomes increasingly, I pulled some numbers ahead of this just about our portfolio trends and how AppLovin spend has shared. But as AppLovin becomes increasingly important in the UA ecosystem, it becomes increasingly important for you to have them on your stack. And then if you want to have edge in buying from this increasingly important source, you also want to monetize with them, thus giving AppLovin even more direct inventory, even more data. So it keeps snowballing and snowballing. And I pulled some trends just at a macro level of how our spend had changed amongst our portfolio. And I saw in the last 12 months, it had been 4x of increase in spend to AppLovin over 12 months. But 3x of the 4x was in the last 6 months. So it's accelerating the pace at which market share is driving to AppLovin.
Yeah, I mean, it's incredibly powerful. I believe in like December last year, even Zynga moved over to Max. So their inventory has exploded.
I think the question is, as the big platforms, Facebook and Google, move to probabilistic attribution, leveraging probabilistic attribution to target ads, can they kind of compete as they are on Android or and take more market share, or are they going to be stuck at the low digits that they are right now?
Yeah, I can give a quick anecdote here too. So I looked at like where that inventory was like in our portfolio mix. We operate and just call it a dozen studios and maybe 18 games currently. And most of that market share had just come from AppLovin's more direct competitors. And I think this gets to sort of like another macro factor. Like for us, I mean, just to sanity check here, the big dogs are still like Meta, Google, TikTok. All of those are still notably larger than AppLovin and just overall UA spend. I don't think that's the norm for most teams, though. Like we are a user acquisition company, so we have professionals and all the different cross disciplines to do it right. AppLovin is pretty idiot-proof. If you are monetizing with them, you just hit the big red button, give them the creatives you tell them to send them, and let their algorithm do its thing. So I think the barrier of entry is another reason why, Josh, you and I were talking about this before the podcast. Our team at Uptick, we actually under-index, I think, relative to the rest of the industry, because we're attacking these channels that are a lot more, that still take more hands-on operation to conquer. Whereas, like I said, AppLovin's pretty idiot-proof. You monetize with it Max, you plug it in, you get that granular data, hit the big red button, let the algorithm do its thing. So it's a good starting point for teams that don't have full in-house user acquisition resources to still get a good result. And I think that's kind of one of the other big unlocks of how they're operating right now.
What could companies like Unity, for example, I mean, not like Unity, what would Unity need to do to become competitive with AppLovin? Because at one point they were kind of head to head, and maybe with the Iron Source acquisition / merger, they kind of looked that they would be ahead of the game, and then suddenly they're not even a partaker of the game.
I mean,
Go ahead, Paul. I mean,
well,
you were there.
I mean, top line, what AppLovin understood was access to unique data gave them an advantage over other competitors. So if you think about what Unity can do, they can attempt to access, well, at least better data than they have right now, and ideally unique data that better informs what games people will pay in, ultimately pay in or watch lots of ads in. That's ultimately what they need to be able to do, to be able to better understand than AppLovin, especially who may pay or who may watch lots of ads in a game. And so they have some assets for that, and Josh has written about this as well before. But they have the engine that should give them a lot of data on kind of what players are doing. So if they can leverage that engine data, one, if they can get permission from the developers to actually use that and then leverage it to better target ads, that's really what they need to do. And I think that is what Vector's attempting to do. Whether they can do it well enough to take some share from AppLovin, I think is still to be seen.
Yeah,
I
I'll
mean,
admit,
I
I was just gonna say I was totally wrong about this. Like I expected at the Iron Source Unity merger, just taking Iron Source's experience with the monetization and UA operations side, and Unity has the biggest unfair advantage at their disposal with just being the de facto game engine in mobile. But they have not leveraged that, and that it's just like an operational gap that seems to be like why they haven't been able to claim this.
I'm not sure about that, because I think the most the IAA data is incredibly valuable, and only the mediator owns that data, right? There's no way
Unity owns that also.
I mean, they have a
incredibly
mediator,
low
but
market share.
yeah, exactly. So they're not in a strong position there. They could make some play for IAP data, so they could require all Unity developers share IAP data with them, and then they would have that data set to leverage to better target those users. But they don't have the ad data that AppLovin has, and it's going to be challenging for them to get that. I mean, yeah.
So I would say that there are two distinct sets of challengers to AppLovin. I think one is Meta and Google, and we can talk about that kind of after, because like Vector I think is fascinating. Then the other rival is Vector. I'll try and give my opinion in the most basic way possible. And so I don't believe that Vector right now has any chance of beating Axon 2, which is AppLovin's app discovery kind of ML platform on
do you want to
IAA
just back
campaigns.
up for anyone who's not in the trenches like us, just define what Vector is?
Yeah, let's do it. All right, so Vector and Axon 2 are kind of nebulous brand names and terms to describe big piles of data infrastructure and machine learning and data pipes that essentially connects all together for these ad networks so that they can decide one very simple thing. What the hell do I bid on that ad? And how do I make it back out to the right return? And so AppLovin's is called Axon 2. Predictably, the original was called Axon 1. The big innovation with Axon 2 is it connected and really utilized the Max data, their mediation platform, in an incredibly robust way, to the point where, I mean, Wildcard, we're seeing higher scale with AppLovin than other in-app ad networks with a similar ROAS, and we're paying much higher CPIs. What does that mean if we're buying inventory from just games and we're getting the same ROAS, but we're paying way higher CPIs? It means AppLovin's targeting is amazing. They're picking the best users out for us. That's really incredible. So for ad monetization, Vector doesn't really have a good way to win because they don't have that unique data. And Paul and Warren, you're right. AppLovin has a lock on the best ad monetization data. But here's the thing. For every dollar in ad revenue in mobile, there's $3 to $4 in purchase revenue. Um, you know, ad ROAS and campaigns are not the largest bulk of even AppLovin's UA portfolio. We all know the big dog, the thing that like ad revenue campaigns wouldn't exist if it wasn't for the fact that we had purchase campaigns and purchase-based games driving in-app purchases into the ecosystem. That is the majority. And so if Vector can acquire unique data on in-app purchases and that kind of data, that is uniquely powerful. And that is the promise of what the engine data could do. And there's kind of two special things about it. One, comparing it to Max, having that real-time powerful first-party data means they will be able to target much more effectively. But aside from the fact that the purchase data is much larger, there's also something special about purchase data. Ad revenue, there really aren't any ad monetized games that have scaled without running performance marketing. It's really weird to see an ad monetized game not running any UA. And yet companies on the IAP side like Marvel Snap exist. What's special about purchases isn't just that it's 3 or 4 times larger than the ad revenue opportunity. What's special about purchases is at least 20% of it isn't tracked. At least 20% of it is coming from the Marvel Snaps of the world, where they're not sending revenue back to AppsFlyer or AppLovin at all. And so not only are we talking about better first-party data, where like the max comparison would be AppLovin gets everything, Unity just gets, it was a $10 CPM. But now 20% of those purchases Unity could know about and AppLovin could not know about. And that's incredibly valuable. Even if you know someone's a whale, like actually, here's a fun fact. There's a magical time when a whale temporarily stops being a whale. If I spend $1,000 a month on mobile games, and I just double spend on $100 IAPs, and I spend $200 in 5 minutes, you know what I'm not going to do? Install your game and spend money in it. If Unity or another ad network has that data and AppLovin doesn't, that's a big advantage. And the promise of Vector is that, well, first of all, it's an incredibly modern infrastructure. The Unity infrastructure is quite old. And the team building it is very strong. I especially believe in Felix Tay, their SVP of Product and Engineering. Like he's a huge part of the reason that I believe in Vector to begin with. But the access to data, the potential, we can talk about the probability of that happening and whether they're willing to do it, especially after runtime. But if they're willing to be the bad guy, like AppLovin was, man, the TAM is like so huge because they're talking about dominating a much bigger market.
I would say that AppLovin has an asset that we haven't really discussed where they can get the same data. So they could use Adjust to get that same data at scale and use that. And I don't think we know for sure whether AppLovin's even using Adjust data in Axon. I wouldn't be surprised if they are. They could care.
The outward messaging is that they're, church and state separation. But yes, there's definitely an incentive at the very least to utilize that data in more aggressive ways, right?
And, just in this theoretical world of Unity competing against AppLovin, where they basically make all their developers share this IAP data with them, AppLovin could also counter with, hey, we're giving Adjust away for free. Everyone come on board. We're gonna, help. We're gonna build this IAP fortress as well, like we've built this IAA fortress. So
I don't see that happening, though. I mean, you can say you don't see Vector receiving runtime data, but I don't see that happening with Adjust for 2 reasons. First, it's extremely difficult to change MMPs. It's not. I used to think it was like a heart transplant. It's actually not. It's like a heart transplant and a blood transplant at the same time, where all of your pipes immediately break for every UA source. So it's quite intensive. But second, what's the upside? One of the reasons they get to claim they don't use app adjust data directly is because they're already, like, the vast majority of customers send back all revenue data to AppLovin when they run UA with AppLovin. And so they're already receiving that data, and they're already doing with it what they can. MMPs like AppsFlyer, they allow you to select what you receive, but with other MMPs, it's much more biased towards, you just send back everything.
Yeah, but not. Yeah, okay, yeah.
I have a small vector rant. I want to get on my soapbox for a minute. So, like, the industry has been talking about vector for months and months now, but Josh, you said a key word a few times, which is the promise of vector. So I think it's important to call out that, like, I think most teams are not materially seeing impact from this yet. You also called out, Josh, that really both Vector and Axon are kind of branding wrappers around a set of initiatives. I fully believe that Unity has a talent inside to execute, but I was checking recently because I was getting asked a lot of questions about Vector, and I was like, I feel like I'm seeing tons of PR about Vector, but very little communications. We operate, Unity campaigns, for a large portfolio, very little communications to the buyer about this. And I actually saw that I have a problem deleting my emails. So I have all the old spam, like, marketing emails from Unity, and I saw unless I missed something, they did not communicate in a marketing email to their actual buyers about leveraging Vector until this month, even though they have been doing this large scale PR campaign to, I think, the investment world for months and months. So I think it will get there, but I think they're a little ahead of their skis with the promotion of it.
Yeah, and
I would
even
say
today, but even like when you run UA as as a media buyer, I happened to see the dashboard yesterday. Everything's still labeled pinpointer, which is like the old one. So it's very. I think Vector is still but a wee babe.
Right.
It's
Which
still
begs the
growing.
question, why are they so loud about it so far ahead of it?
Because they want to buoy their stock price, basically.
Exactly.
That's the only reason.
I think there's two reasons. I think Paul was correct about the first reason. When I on the admon sides, I would say that what we saw when Axon 2 rolled out was very different than what the UA side saw. On the UA side, I mean, Warren, it was fairly, like, boring. On the admon side, it was absolute utter chaos. CPMs crashed. I had the most senior person I worked with at AppLovin say, "I'm sorry, you're going to have to go and sell your inventory to Unity and Meta." And then a lot of the executives literally flew to Bali and stopped answering questions to any of the account management team. It was bad. It was crazy. But what came out of that was an incredible platform that, once it was trained, was really powerful. But what that taught me was that it's very hard on an individual UA campaign, like individual app, to see something, whether this ML platform is working. But on the ad monetization side, when you're selling, you're servicing everybody. And so you kind of see a portfolio. And while Axon 2, when it rolled out, was a terrifying and scarring thing, that incurred a lot of, like, I think, negative feelings from the ad monetized publishers that worked with Max. Looking at Vector today, we see something different. Over the last 3 months in Wildcard Stack, we've seen Vector increase its share of voice by 30%. Which is surprising considering how quiet it is. And it's still clearly not done. Now, on the UA side, we have seen an uplift of
30% from what base, though?
From, I mean, it's still under 10% total share of voice. So now it's in the 5 to 10% range.
And AppLovin's at say 50.
Oh yeah. Quite a bit larger. So they have a ways to go.
I'm not sure that says anything apart from, they could be pumping it full of their own dollars just for testing. I don't know what that says.
Well, we'll find out. If they're pumping it full of dollars for their own testing, we'll actually see something really loud. We'll see a revenue collapse, right? Because what we see is like revenue from AppLovin and Unity is UA spend minus what they pay out to the pubs. And that margin, I would call that margin, but they call that revenue, right? And so if they're taking a huge wash on that, and they're taking like a 50% wash to pump it up, we'll see a collapse in Q2 earnings.
For me, the important takeaway.
Go ahead.
Yeah, go ahead, Josh.
So I think that the way Bromberg is being held accountable right now, I think it's very unlikely that they accept like a major drop in their thing that's generating the majority of their EBITDA and the majority of their revenue. I think that they do not want to see their stock price collapse right now. And the grow segment is 2/3 of their revenue and probably 80%, if I had to guess, of their profit. And so showing a negative result there, I think, would be a scary thing for them. It would be challenging. So I don't know if they can afford to do that, to be honest. But maybe I'm wrong.
What I'm thinking about as you're saying all this, Josh, is like, I represent the buyer side of this equation, right? And it's clear that like the tip of the spear when things are changing is going to be seen on the developer side and the teams managing admon. And it's like you're seeing the hint that something is changing. You guys are a single developer with a portfolio of games that represents like one data point in the ecosystem. As if this gets traction and continues to improve for you, word will spread, other developers will start to see these impacts as well. And then there's a lagging indicator on the buy side. It's like, so I think the tip for anyone on the user acquisition side is like talk to your friends on the product side, on the monetization side. If we see that Vectors is getting these improved results, is going to be a signal that it will be more important to you on the buyer side, probably in the months ahead. Because same thing, when everything changed for Axon, it was my initial reaction was like, nothing's changing. We're seeing the same results. But now a year later, holy shit, like massive shifts in UA spend distribution to AppLovin. And I predict it'll be the same thing if the Unity team does what you think they are capable of.
Yeah, I mean, I think Paul was right. Achieving big growth numbers is easy when your top competitor is 5+X larger than you. That just like I used to joke when Wildcard was a baby, like, oh, look at this, we're doubling revenue quarter over quarter. But at the time we were doing like 20 grand a month. So it's like, yeah, of course we can. We're at a very different scale now, and now it's really hard to maintain those like 50% year over years.
I would
go ahead.
Sorry, sorry to interrupt you, but I would just be really curious to see what their actual strategy for Vector is. What segment of advertisers are they focusing this launch period in? Is it?
I have a hypothesis.
Is it IAA? Is it IAP, as we've suggested they should probably focus on that? Because it doesn't make sense to launch a product and just try and build it for all their advertising customers.
No, it's really scary. It's really hard to do what they're doing, which is like not just a heart transplant, but a heart transplant while the patient's awake almost. Whereas with Axon, it was just like there was a surgery and we woke up and there was trauma the next day. Now it's like all happening in real time.
I mean, but the benefit for AppLovin at that point was they had enough penetration of them of Macs to really focus on IAA games, right? That they could segment that customer base and say, we are going to make this work very, very well for this set of advertisers. What's Unity's strategy? What segment of what type of games are they focusing on to actually get Vector V1 to start working?
Yeah. I mean, when I hear in the industry people saying that they're having success with vector, because like Wildcard on the UA side is not having massive scale increases. I can say that for free on the UA sides. But if you look at all of their case studies and you hear people who are happy with vector, it's IAP based. So my suspicion is that they're solving the harder problems first, and whatever works for IAP, they'll be able to expand out to IAA in the future. The challenge is that they need more data sets. They need unique data. They need more features for their ML to train on.
I'm not sure it's only IAP. I'm looking at their case study they released a month ago. From
blended.
It was Zephyr Mobile, part of Triple Dot.
Yeah.
I'm pretty sure this is an ad for an IA game.
Interesting.
I think the most interesting piece about the case studies I've seen out of Vector is none of them have mentioned ROAS so far as I am aware. So this one talks about increase in install volume and drop in CPI, obviously, on iOS, but nothing on ROAS. But I mean, that kind of goes to the point we were discussing earlier. Maybe ROAS is a lagging improvement, but my question remains: who is Vector for right now?
Now you lost me, guys. Like now we're super deep. So I wanted to pull back and focus on more on like individual and operator level type of questions, and really hear your opinion on let's say if you are running a mid-size mobile game publisher, just like Josh is actually, not even a fake scenario. Like, how would you set up the organization today? Like, what would your growth organization or UA organization look like? And what would you prioritize? What would you deprioritize? And overall, what are the key differences of operating your growth team today versus what it was just a couple of years ago? So, Josh, this is too familiar for you, so let's have you go last. Let's start off with Paul.
Yeah, I'm probably not the best person to comment, but I'll give my thoughts from just speaking to UA people generally. So I think, firstly, I mean, we have to acknowledge the efficiency economy that we're in right now. And I think, there've been so many layoffs also on the UA side. So I think we're doing more with less. So I think, we have fewer people doing these roles and being asked to do more. So my first kind of thought is like, you should really simplify as much as you can and focus on doing fewer things and doing them well. However, that doesn't necessarily translate to kind of the creative side of things. And I think the creative side of things is really a focus on doing as much as possible and getting as much diversity as you possibly can in kind of your creative mix. Because you really need to fuel these ML machines with as much creative as possible to really allow them to pick the winners. And so if you think about how you set up an organization, I think, you need to simplify it as much as you can, have creative work very closely with your UA team. It really should be part of the team, not kind of a separate organization. Obviously, depending on the size of the organization, but really creative and UA should be side by side. And really build an organization that really builds a creative generating machine, because creative is really the only lever that teams have now. So that really is the last frontier of UA is on a day-to-day basis is really creative. And so how do you build a creative machine that builds concepts and ships creative at scale is kind of the question there.
Well, you just teed off perfectly for me to shill AppFlyer's State of Creative Optimization 2025 edition. Just taking a point out of that, I remember they had the stat in the report. They said top 2% of gaming creatives pull 53% of total spend. So Paul, you're saying try as many things as possible, be efficient in trying as many things as possible. But at the same time, when you find what works, that's going to be the concept of hero creative seems to be still well alive.
Yeah, when you say try as many things as possible, I'm talking about the creative side, not the channel side. I think
creatives.
Given your resource constrained on the people side, likely, we're not in those growth days that we talked about earlier. You really need to be thoughtful about which kind of channels you're working with, but double down on the channels that are working, and then triple down on the creative side of things.
And just an additional question, like anybody can answer this one except myself. When you're thinking about focusing, and we're talking about channels, so what you're saying is perhaps limit the channels you're using, but at the same time, if you're thinking about your UA team, would you have them focused on channel or focused on a product? Today's podcast is brought to you by AppsFlyer, inviting you to dive into their new first-of-its-kind report, The State of Creative Optimization 2025 edition. It's not about how to make creatives. It's about understanding what makes users actually stop scrolling and what emotional and psychological triggers drive performance. Based on over 1 million creative variations and nearly $2.5 billion in ad spend, the insights in the report will help you develop a winning creative strategy. Check out the link in the podcast description below, or go to appsflyer.com and search The State of Creative Optimization. That's appsflyer.com.
Yeah, I can jump in here maybe. So I think one of the biggest false conceptions in UA is like, I just got to find that channel. It's just like, maybe there's that I'm going to keep testing channels, I'm going to get a totally different result. You're not. Like, if UA is going to fundamentally work, or it's going to fundamentally not. And it's a combination of creative, which Paul really focused on, and product is the two biggest levers. To the question, Mishka, of like how to kind of optimize and lean teams out, or how we're thinking about that. We literally cut our UA team in half, which might sound crazy for a UA business where our actual book of business is growing. But we retooled the team, and this kind of ties back to what we were talking about earlier, of how these algorithms are getting stronger and stronger. The person pulling the levers is an increasingly small part of the puzzle. Like, it's 10%. So we didn't reduce the overall team size. We reorged the team, and we put about half the team on what we call like the growth strategy team, which is basically like cross-functional operators working with product, working with admon, working with creative, and just doing little stuff that falls through the cracks, like data governance. I have to watch my words carefully here. There was a large acquisition that happened in somewhat recent history, where when the dust settles, the games were wildly undervalued because of a data governance issue. The UA was missing, call it 90% of the revenue, because of a simple data governance issue. So it's just weird stuff like that. That's like, it's not specifically the UA person's job. It's not specifically the CEO's job. It just falls through the cracks. It's not the person building the dashboard's job. And so us just putting part of the team on just sort of like this cross-functional kind of like SEAL team to find like, why isn't growth working? What can be improved? That's how we've reorged. And the thing that we've almost completely eliminated, and I think the worst job in performance marketing right now, is BI or analyst. Like, because this, with the technology we have now, leveraging AI, or we just built like plug and play reporting. Every company needs the same reports. Every company wants the same forecasting. So we have that like fully automated. Like we sell it. Show my bag for 1 second. Like we have like, it's like basically $1,500 a month to like replace all of your BI and analytics. Like it's a commodity now. So I think that is probably one of the worst roles to have, and one of the easiest things to optimize, because there's, even if you don't want to leverage third-party tool, you can just use AI to like look at your data and provide insights, provide views. So what we're not reducing and increasing focus on is creative, exactly as Paul said. Like, that is the product that marketers are putting in the world. Like, that can almost always use more love, more TLC. So increase resourcing for creative, increase cross-functional growth work, decrease lever pulling, decrease BI analyst functions.
And I think the important point to note on the lever pulling is there's just no levers to pull anymore.
Right.
The levers are all been automated by the platform, especially the big platforms, but all been.
There's a little more nuance to that. So like, we track our time in a pretty detailed way here. And so we found the number one time tracking thing related to UA was like building a cadence and rotating in new creatives. So that's like the next thing that we're trying to automate fully. But again, it's really just, you're just trying to make the algorithm happy. You're just trying to give the algorithm stuff when it's basically giving you signals saying like, boss, I'm hungry, to feed it and feed it the things that it likes. So the job is really changing versus a decade ago. How about you Josh? Like, what are you guys like levering up, levering down
From the horse's
Yeah,
mouth.
I mean, I agree. I'm an Uptick disciple on this one. So the way that Wildcard is set up, and I'm going to overgeneralize, is that there are kind of three high-level concepts. There's a creative team that effectively tries to minimize the cost per install, a product team that tries to maximize revenue per install, and a data team that tries to balance those two and maximize ROAS. And so if our goal is X% ROAS or X% annualized rate of return, their goal is to spend as much as possible and hit that target. And as the creative team succeeds and drives down CPI, they can scale. As the product team succeeds and increases LTV, they scale. But now, rather than the media buying team being these lever pullers that unlock growth, it's now of a data team being like, actually, we're just going to give what you take. We're going to take what you give us. And so the big focus inside Wildcard has been for years now, how do we create the tightest possible feedback loops for the creative team? Because if you asked like me 5 years ago, basically the media buyers would run creative.
which is a horrible decision.
And would like file tickets and be like, yeah, like give me 5 videos by Friday, like that kind of a deal. But now our creative team runs their own creative tests. They can create UA campaigns by themselves. They can create creative reports and like do these loops crazy fast, especially with the advent of AI in the production process. And what we've seen is a huge improvements in just like how fast and how effective they can be when you remove red tape, approvals, and other human beings from a feedback loop. So it's only the actual like skill positions focusing on creating value in the position where they're skilled. And then they just deliver those creatives.
What levers do the product team have within that org structure? How do they hit their KPIs? I'm curious.
So the product team is really only materially worried about LTV. And so there's kind of two aspects to that teams think about. There's the live this is kind of getting way out of UA, but I mean, UA is one side of the same coin. And so the big challenge of our mobile game world is that product teams, especially old product teams, think about like daily revenue. How many DAU, what's my current ARPDAU? What's like my calendar day? And UA teams think in this cohorted view where it's like today's revenue, 10% came from installs, 3 months ago, 20 came from 2 months ago. And so the product team's big challenge now is balancing those two. And so we run optimizations that are focused on new users, and we look at it from a cohorted view. And we run optimizations for retained users from a more daily view. And so what the product team is doing is consistently trying to, on like that cohorted view, improve not just LTV, but revenue milestones and revenue maturation ratios. And so, for instance, if the UA team says, okay, well, 6 months ago, if 5% day 7 ROAS backed out to our target, great. That hits our target. But the product team adds a feature. And what this feature does is it increases short-term revenue by 50%. But it kind of like is only up on D90 by like 5 or 10%. Like it's a very upfront feature that can break all those projections and those estimates. And so they are working closely with the data team to help and make sure that LTV is being assigned in the correct way.
Warren,
Paul, you're muted.
What's your take on Josh's organization?
No, I think it's smart. I mean, I'm always pretty candid with Josh. I think they have their team being really cross-discipline, I think, is their unfair advantage in the space. Like the worst results I see are super siloed teams. We talked about one byproduct of this earlier, which is like everyone knows there's like UA attribution fraud or at least malintent happening, but it makes the UA manager's numbers look good. We've got brought in for audits before where we found stuff like that, and UA managers basically like, yeah, but our numbers look good, so we're going to leave it alone. So just everyone being aligned and working cross-functionally, I think, is the big edge there.
What's the best way to test creatives, or is there a way to test creatives? Like I've done a lot of, CPI testing early on, and it's sort of a nice thing to have to help to greenlight your project. But then again, once the game goes live, you don't know how quickly the CPI is going to move, and plus how it's going to develop over the time. So is there a way to test it early, or is it just when you're live, just keep on hammering and try as many creatives as possible?
So this is evolving pretty quickly right now. I think that's a good question to touch on. It's just one of the areas where I think the kind of false signal right now is that like AI generated creative is going to solve your creative problems. The issue is not that you can't generate enough creative. Like you have to get sample size for each creative. So if you have 10,000 creative to test and you need to spend a few grand to test each of them, congratulations, you're out of business now. Like you've successfully tanked your company. An emerging field that a few people are building in now is like simulated audiences for UA creative testing. So, I mean, these days it's a non-sexy answer. You just build structured, siloed meta campaigns for creative testing or whatever networks you're doing. But I think even a few months from now, we're going to see teams moving to AI simulated audiences to test creatives at scale. And now all of a sudden it does become a little more interesting to generate high volume creatives. But for our team, we focus a lot on volume, but more on differentiated. How far apart are your creative ideas? What is the breadth of ideation that you're covering? And most people are shocked like how few like creatives we are actually shipping a month and testing for large games, because it's more about well-produced, differentiated creatives.
And so when you're talking about producing creatives, I remember like long time ago, we had Gonzalo Vasanello. He was CMO of Tactile back when Lily's Garden was really scaling up. And he talked about the team composure and almost kind of approaching, like this was pre-IDFA. He was talking about approaching it almost like an ad executive, kind of coming up with a story and then really being creative rather than throwing spaghetti on the wall or copying whatever else is doing. What's the prevailing approach right now?
Everyone's still copy pasting. Like we were doing some analysis. We were working with a partner that's in the sports betting space, and we were doing some app store analysis. All of the competitors were showing pictures of phones in the screenshots. And it's not because this converts well. Like we've done tons of tests. That's like it was like early days of the app store. You show a phone so people know they can use, like, we know we can use the device we know we can use the app on our phone. Like it's 2025, but everyone's doing it because they're just copying what each other are doing. They're not using like first principles for like, just actually thinking like a marketer doing something that actually converts well. So I would say that predominantly people still copy each other. We see our biggest wins when we actually, take more of a marketer's like Mad Men approach. Like what's going to be something that's actually novel, gets your attention, is fun to watch, is engaging.
And I think
for a reason. Go ahead, Paul.
Well, I was going to say, I think so Warren, you were kind of a little bit negative about the potential of AI, but I think the question for AI is, can AI generate novel new concepts? Because right now humans are doing it and doing it with a ton of random, almost random, right? It's just like, can I clip this stuff together and generate a good IPM? I think the question for the future in AI is, can AI get enough data, get enough context on what's working? And you're completely right. Everyone's copying everyone else. I mean, that's basically what they're doing right now. And then someone has this random new concept. Can AI do that? I think is the question for whether AI fully takes over creative or not. I think it probably will do at some point. I don't know along what timeline though.
I think there are two kind of key challenges that we have with like a creative. And I think we forget about one of them. The key challenge we all think about is, how do we connect with the player, with the ad, and make them want to install? But there's actually one other problem. There's effectively an incredibly stingy accountant between us and the player, where the ad network is trying to figure out what ad will convert the best. And when we think about that, we think, well, we have these 5 ads and it knows about this one really well. But that's not even really true. What it actually knows about is hundreds of millions of what all your competitors are looking like. And one of the problems that we have now is, well, if you copy a competitor, AppLovin, Meta, Google, what they're going to say is, oh, he gave me some stuff, or they gave me some stuff. It looks like what I know works. And so I feel confident buying and pushing into that. And so the algorithms are always going to push things that are copy paste. And how do you overcome that is like a really big challenge. And so I think the one thing that I would disagree on, Warren, is I think our team to some degree accepts that the algorithm is going to pick what the algorithm picks. And so we have a firm policy at Wildcard of just trying to drunkenly meander in like the right general direction. And if we bounce off of walls, that's fine. And we don't really think about like cost per creative. We think about how much it costs to get a winner. And depending on the ad network, if you're doing social, it's probably a few more. And if you're doing, in-app ad, it's probably less per month. But to some degree, we are just trying to figure out what is the network comfortable with, because that's our first filter.
I'm not sure the goal is, you said that kind of the first goal is to connect with the player. I'm not sure that's the goal of creative for performance marketing at all. I think the fake ads show that connecting with the player on the game content is
well,
not...
that's a connection. It doesn't have to be genuine. Like,
so then I think you probably need to describe it differently. I don't think connection with... I think the goal is to drive an install ultimately, and then obviously
the goal is profit.
Yeah, on a longer term, but you can't generate profit without an install. So like IPM has to be a top of funnel metric, and obviously there are deeper funnel metrics. But I don't think connecting with the player is the goal of creative. I don't know what it is, but
it's a push pull, right? Because we know that for any customer, if they're misled to the experience of the product they're going to get, it's a negative impact. But there's a crazy clickbait factor to the ads that you're speaking to, Paul. So it's a gambit of can the clickbait factor of this over the top clickbait ad overwhelm the aversion that the user sees when they go to download a product, and it's not what they saw in the ad. So I don't think it's that the clickbait ads are helping with that like later user funnel. It's just if the clickbait factor can overwhelm the negative impact of it further down the funnel.
Yeah, I think that's completely true. And there are hard to measure impacts of that too. Like when I do competitor analysis, I'll name names just to be mean. But if you go and read a lot of triple dots on Vita's user reviews right now, these are ad monetized game companies. There'll be a lot of 1-star reviews saying the ad explicitly promised there would never be any ads in this game, and I open it up and within a minute it's showing me ads. And you go and you look at their top ads. The ads are saying in big bold text, "No ads, download now." And then it's an ad monetized game that has no IAP.
And this is I don't think it's binary fake ads and not fake ads. My point is that I think there's lots of shades of gray here around what you communicate in the creative and really what you're trying to achieve. And maybe that's a connection to the player, no ads. But as you're thinking about new concepts and what you're trying to achieve there, I'm not sure only connecting with the player is kind of the goal.
All right, I wanted to take this home because you guys are losing me. You're going too deep, and I'm a shallow person. So I wanted to kind of end it up with just one question for each of you: is like, what's the most powerful way to gain an advantage in today's market when it comes to UA?
I think that in UA, the thing that I've seen teams most reliably do to cause success is to break down all of the key tasks into individual pieces and focus on creating ultra fast feedback loops. Ultimately, every team is incredibly scaled in their UA. We're all running experiments super fast, and we're all like, CPI is going up for two reasons. One, because of inflation and margins and stuff like that, but also because game LTVs are going up. There's a constant arms race of just how good things are getting. And so the faster you can help your team iterate, that's on creative, on LTV predictions, and on products, the better. And so on one hand, that means those teams collaborating, but on the other hand, that means unencumbering those feedback loops and breaking down layers of approvals to maximize how fast those loops can turn around. Because really, you're trying to figure out how to make the most gains you can, and create a gap between you and your competitors.
Yeah, this is going to be a weird one. It's just top of mind because we just did it. I would say actually do an exercise in time tracking for your growth team and find the low value work. I think it's going to be a little different for each team, but probably for a lot of teams, what you're going to find is it's something like building spreadsheets or building reports, something like that. There is a lot of low value work that exists in organizations just because that's the precedent that's been set. That's step one. Step two is like give your team some non-zero engineering resources, either internally or through third party, to solve for that. So that's the number one thing we usually see when we come into an organization. There is usually just some sort of archaic bloat of process that's not adding any value, but taking up a lot of people's time. And just identifying that we have so much, we've never had more tools available to automate and remove that low value work, but it takes someone to identify and push to change that process. And that's true for growth, but you can kind of apply it to other aspects of business as well. But start with time tracking.
Really simple and effective. That's a good call. Paul?
Yeah, I think Warren and Josh kind of gave similar answers in terms of efficiency and feedback loops. I think that's the common theme here. I would just kind of add just a real focus on creative and ensuring that you've got an optimal machine to generate creative concepts and basically double down on the ones that are working. So, efficiency is key, but, if you wanted to overinvest anywhere, it would be on the creative side because it's probably the biggest lever you have. But yeah.
Beautiful. Well, thank you so much for very actionable advice on how operators can upgrade themselves and upgrade their organizations in 2025. It was a privilege. Guys, you are so much more smarter than myself. I will need to listen to this 3 times to understand a third of it. But I appreciate you coming on the podcast, and let's do this again.
Thanks for having us.
Cheers.
Pleasure. Thanks for having us.
Thanks, everybody, for listening.
Cheers.
Thanks for listening to the full episode. Now, did you know that Deconstructor of Fun isn't just your favorite industry podcast? We're also a bit of a consulting powerhouse. Now, whether you're launching your next hit, scaling your live ops, or vetting your next acquisition, we've got you covered. From market research and go-to-market strategy to live operations tuning and due diligence, our team of experts works with the top names as well as the rising stars of the industry. So if you are building, publishing, or buying, don't do it alone. Do it with us. Email consulting@deconstructoroffun.com and let's build smarter together.